Hey, Bill O'Reilly here, host of the No Spin News on BillO'Reilly.com, where we cut through the noise, keep you informed on the biggest challenges facing our country today. Yeah, I'm doing that. So I've been telling you the truth for decades, and I've really been more concerned. Luckily, I'm here to tell you things you can do right now to protect your personal and financial freedom, starting with today's webinar, Gold and Silver 101, with Machi Block, Senior Director of American Hartford Gold, the only precious metal dealer I trust. They've been with us for years. So as most of you know, these days we're up against some challenging factors. Inflation back on the rise, national debt crisis, and conflicts raging around the globe. All the while, anti-West forces are aligning to dethrone the dollar, overthrow America's role in the world. So I hope you're ready for some exciting and valuable insights, because today's webinar is all about securing your retirement savings in these wild economic times with physical and gold, silver, okay? Whether you're a seasoned pro or just dipping your toes into the water, American Hartford Gold has something for you. During today's session, Machi will dive into how physical precious metals can be a financial safety net. You will learn why they're a must-have in a well-rounded retirement portfolio, and discover how easy it is to get started. We'll hear about the latest news and trends impacting gold and retirement planning. Plus, we'll get to know more about American Hartford Gold and how they can help design a personalized solution to secure your financial future. And if you stick around till the end, you'll find out how to qualify for up to $15,000 in free silver on your first order. So let's get started. Now, let's hear from Senior Director of American Hartford Gold, Machi Block.
Thank you, Bill. We certainly appreciate you here at American Hartford Gold, and we appreciate everything you've done in the industry. Everybody, welcome to today's webinar with American Hartford. My name is Machi Block. I'm going to let you guys get settled in here. A couple more people filtering in. As you come in, please just write something in the chat there. Leave a comment. Let us know where you're watching from. Still morning here in California. Good afternoon to you on the East Coast. And then also let us know in the chat, is this your first time buying gold and silver? Have you bought before? You know, just tell us some details as we get into this here. Now, again, I'm Machi Block, Senior Director at American Hartford Gold. And I'm really here to help you understand what's going on in the industry, the markets right now, why gold and silver, and then, of course, how to get into gold and silver as an investment, as a hedge on your portfolios. And look, we called this emergency webinar right now because there's so much going on in the political landscape. It's changing so fast day to day. And certainly this is being done in a way that can have a very negative impact on your portfolios, in your investments. That's why many of you are here right now. And so increasingly, we see that more and more people are looking and having this desire to protect their investments into precious metals. And of course, if you need help making sense of the chaos in the markets that we're seeing right now, that's the goal for today. Hopefully, I can give you some clarity on that, and you can really get settled in with what's going on, why you might want to diversify into precious metals, and exactly what that would look like. And of course, you know, why American Hartford Gold as well. So really do appreciate you all joining us here. And it's nice to see you. So we are getting some good people filtering in. Look, here's what we're going to do. Just an overview on this. We're going to cover some topics on the economy, including the Trump tariffs that are happening right now, the trade war, the market crash that we've been seeing over the last couple of weeks. And then, of course, recession and the dollar, why gold and silver, who American Hartford Gold is, and obviously so you know that you're with the right company when you're investing into precious metals. So look, a lot of our clients are increasingly concerned and seeing the impact of the economy and the markets on their portfolios right now, and they're looking for ways to diversify their portfolios. No matter which way you look, there seems to be something new changing every single day here. And I've got to imagine that's the case with all of you and why you're joining us today. And if that is the case, then your timing and your intuition really couldn't be more spot on for making some kind of change here. We've never seen a better setup for precious metals than what we're seeing right now. We'll get into all that. At any point in time in this webinar, guys, if you want to chat with us directly, Of course, you can leave some messages in there and we'll communicate with you that way. But also, if you want to call directly and chat with one of our account executives, we do have many moderators and account executives on standby ready to talk with you. And so you can call the number on the screen at any point in time. That number is 866-607-2447. And you can really have a more in-depth specific conversation. And we are standing by to help you with that. So obviously, we're going to get into some good topics today. That's why you're here. But at some point in time, if you want to just jump off and get right into your own concerns, your own questions on your accounts, call that number and we'll be able to kind of lead you in the right direction in a one-on-one conversation there. Now, do leave your message on the message board. I do have some moderators that are helping. They're going to feed me those questions periodically. And if you really have a specific question, you might get pulled into a one-on-one group chat where they can kind of answer your question more in depth. And then just keep in mind that as you write these questions, anything that you have that's coming to your mind really helps us to tailor these webinars as we go forward. So even if you think I'm going to cover that content, just leave that message in the chat for us because it gives us a good sense of what's important to you. And of course, that's why we're doing this here. Okay. Also worth noting, this is not financial advice. I'm not here to give you my opinions, really. I'm trying to bring you the opinions of experts, of economists, of the investment banks, and giving you the biggest sense of what we're seeing in the markets and the news right now so that you can make your own decisions. And clearly, we want to provide some clarity for you as well. So with all that said, I'm going to go ahead and just rattle off some of the current things that we're seeing right now because that's why we're all here. Right. So the market right now is experiencing record volatility. We have the dollar dropping, huge drops in the stock market, and of course, a crashing bond market as well, which is very rare. And this equates to massive selling across the board, right? We have hedge funds that are deleveraging and creating this volatility in the market, and really they're preparing for worse conditions up ahead. It really represents a reduced attraction for US dollar-based assets, and all that's happening amidst erratic decision-making from Trump. Now, America is certainly heading in a new direction with Trump at the helm. Okay, it seems like the very foundations of our economy are beginning to shift and shake up in a new way right now. We've got tariffs happening, a trade war full scale right now. Markets are coming down. As I mentioned, stock market, we've seen tremendous volatility there, but also the bond market, which is traditionally the conservative place for investors to go to in times of turmoil, that's also crashing and is beginning to lose its status as a safe haven. We also have economists across the board that are predicting a recession, and that certainty is going up through the roof right now. Headlines have really shifted. This is very important. This is what we're seeing across the board. You know, headlines used to say we possibly are going into a recession. Potentially, maybe we'll have a market crash. And now that language has shifted to be a lot more dramatic with things like financial crisis, depression, bond market blowing up. And so when we see the headlines shifting in the news, that's a very good indicator of where things are headed, and obviously the current state of the economic markets as well. We have $9.3 trillion of US debt that has to be refinanced this year. Trump is trying to force the Fed to cut rates and get the dollar to start printing and free flowing into the economy to stimulate that GDP. But he's also pushing us into a recession to make that happen. Now, there's plenty of geopolitical uncertainty across the board. That's ramping up. Obviously, Russia is not cooperating here. We still have that war going on. There's tensions rising with Iran. China says they're ready for war, whether it be economic or kinetic. And of course, we're stirring the pot with our allies as well. That's yet to be seen where all this lands. Gold is hitting new all-time highs. Silver is incredibly undervalued. That ratio between silver and gold is stretched to about 100 to 1 right now. And silver and gold are really best in this environment where we have inflation, devaluation of the dollar, there's economic uncertainty, there's recession, there's stock market crash, or low interest rates. That's where gold and silver tend to thrive, okay? Central banks as well are buying more gold right now than at any other point in history. And really not a single voice out there in the world of economics is saying that gold will not go higher and that silver won't follow suit. And then many investment banks are adjusting their outlook and their price targets on where gold is going to be, and they're putting that price target higher. In fact, Goldman Sachs, UBS, and JP Morgan just adjusted their targets to about $4,500 to $4,700 an ounce this year, depending on how bad things get. So what I would tell you all is that we're really in the first or the second inning out of about a 9-inning game here. We're just getting started. And again, we've never seen this many Americans getting into precious metals. But again, that number is only increasing as people wake up to what's right in front of them. And so, here's how we help our clients. We can do that in two ways. If you have cash off the side or a brokerage account and you're looking to put that into precious metals, you can do a wire transfer or a check. We'll ship gold right to your door. You can have some physical, tangible gold and silver on hand. Or for our clients that have retirement accounts, the majority of our clients have most of their net worth tied up in old 401ks and IRAs, and they want to get some risk off the table. And so you can actually put physical, tangible gold and silver into a retirement account as well. Now, either process that you do is incredibly simple with us. And of course, I'll cover all that as we go forward. But that's the big picture, right? So I just want to check in with you here. We'll take each one of these step by step. But is that making sense as I kind of cover what we're going to go over today? Do you guys have any questions on that before I move forward? Anything that you really want to see me cover or delve into specifically here? Somebody said, tell us about the 401k rollovers. We will dig into that, Ron. What we're going to do is kind of as we go through the market conditions and what we're seeing at the very end of it, I'm going to walk you through the very specifics of how the process works for cash, as well as the IRA rollovers. And I'll give you a step-by-step on that. And again, if you just want to cut right to the chase and jump on with one of our account executives and learn how that process works more specifically, you can call that number and just jump on right with one of our directors or executives here. Okay, let's talk about the stock market really quick. I'm sure that many of you, as we all are seeing that shift in your portfolio right now. The last couple of weeks, the last month has been incredibly volatile in the stock market. It's just absolutely crazy lately. And markets are really swinging like a casino, right? Every time Trump comes out and says something, the markets are either up or they're down. And it's not just small shifts, it's dramatic swings that we're seeing right now. We are experiencing historic rallies and then huge sell-offs. There's just record volatility. Again, every day, something unpredictable is coming out of the White House. And for most of our clients, that's really not a casino that they want to stay in. We go to the markets for stability, for predictability. And I would just say none of that is on the table right now. And you have to ask yourself, in the midst of this volatility, where is the one safe haven place that we're seeing according to central banks and investment banks? And increasingly, that's gold and silver. If we look at the stock market so far coming off its highs, the S&P 500 is down 18%. The Dow is down 20%, and the NASDAQ is down 22%. And again, the general consensus and sentiment is that this is just getting started. There's a lot more downward pressure coming. And this is huge. Now, for those of you that have been paying attention to the markets, especially with gold and silver, what you may have seen last week with the major sell-offs in stocks is gold also sold off. So did silver. What happens is you have these major Wall Street institutions and investment players that are losing dramatic amounts of money. Their margin calls are coming due. And so they're selling the most liquid assets that they have. Typically, that's paper, gold, and silver. You will get a temporary sell-off in the gold and silver market. But what we've seen is that the physical side doesn't drop near as much as what the paper side does. You get the stability in the physical markets that you just don't get in stock, gold, and silver. And gold has already recovered that loss, right? It's already back up to new highs and covered that ground. And so what we're seeing is that trend is set that gold is going up and markets are shaking. Now, understand when we look at this, Trump is obviously changing the landscape both politically and economically. He says that the U.S. doesn't export anything, right? That's what he's trying to do, is turn us into a producing and an exporting nation. But the reality of it is the U.S. exports dollars. That's what we do. We do that through consuming goods from other countries, exporting those dollars to them, as well as foreign investors investing into our stock market And that's one of the many reasons why people are selling right now is there's just no confidence, there's no clarity, and there's no certainty in our markets or the future right now. And Trump is certainly disturbing that established order. Now, please note that I'm not here to say anything positive or negative about Trump. I know everybody has their own sentiments on this. I'm not here to pick politics. There can be a very clear case made for why Trump is doing what he's doing. On the other side, there can be a very clear case made that Trump is messing things up. But regardless of what side you fall on, what we're really here to do is to separate the cause and the effects, not necessarily the intentions or the intelligence of this. Okay, so keep that in mind as I go forward. I'm not here to upset anybody. I'm just here to give you what we're seeing economically and where that leads for your portfolios. Now, in times of market instability, when we're going into recessions, when the markets are coming down, there's tons of relief rallies and bounces that we see along the way, right? The NASDAQ rose 12% in a day last week following Trump's pause on the tariffs. And then massive rallies like this really have only occurred during historically bad stretches of the market. So if you look at the dot-com bust and the 1987 crashes, we had massive relief rallies all the way down, just like what we've seen so far here. Of the 25 best days for the NASDAQ, including what we just went through, 22 of those days took place during the dot-com collapse and the 2008-2009 great financial crisis or the early days of COVID. And so I say this so that you're prepared as we go forward to see the markets bouncing and getting these reliefs and getting that volatility as we continue that trend down, if that's the case. So remember in 2008, during the great financial crisis, it took 19 months for the market to actually find its bottom, from September of 2007 all the way to March of 2009. And it was just this long, slow bleed out. It wasn't a single free fall. So the market has a way of causing all kinds of uncertainty. We trust it, we don't trust it. We get turned into this place where we have no idea what to do. All the while it continues to bleed out and we find ourselves in a long drawn out recession and bear market. And that's what we're seeing right now, according to the experts. So again, if you're seeing that impact on your accounts, if your portfolios are getting shaken up by this and things really aren't looking great, you're looking for a way to diversify and hedge against this volatility, precious metals are an excellent choice at this stage of the market. And you can give us a call. You can have that one-on-one with our account executives. They are standing by to help you. Our number is 866-607-2447. They can talk to you about your specific situation, your portfolios that you're concerned about, kind of walk you through what makes sense in your situation to get that hedge with gold and silver. Okay, I also want to jump into the bond market next here, okay? People tend to focus on the stock market. That's where we put our gaze. We put our money in markets. We expect the stock market to be this leading indicator in the economy. But in reality, the bond market is the plumbing of the economy and the banking system, right? That market is imploding right now to a way that billionaires and hedge fund managers and investment bank executives are all starting to sound the alarm and ring that bell on it, saying this is actually the thing that we need to be watching. The bond market is where conservative investing typically takes place. If we're going through market volatility, financial advisors will take your account and they'll move you into bonds for that safe haven place. But with the volatility that we're seeing, it's no longer the place for conservative investors. It's no longer that safe haven. The place where financial stability should always exist is showing us the opposite. So if the traditional conservative investment is no longer a safe haven, that means that money is moving. And the reality of it is there's only so many places that money can move to. And of course, gold and silver are one of the biggest places you can put the money in times like what we're going through. And so of course, that's why gold is moving. We have Japan, China, and the UK. They're the biggest holders of US treasuries. And we've hit all of them with tariffs. Right, we're starting to impact their economies, and Japan most likely has already started dumping their treasuries. That's what we saw last week when the bond market started dropping. And the scary news is China is reserving this ace up their sleeves as we go to war with them on these tariffs. if they want to really hurt us, of course they'll hurt themselves, but they can dump US Treasuries and really cause massive pain here in the US. And so they see that. They see the bond market dropping, and they know they've got that as kind of a bargaining play on their side as well. So again, most likely Japan has started dumping their US Treasuries, and that caused Trump to pause his tariffs for 90 days just to avoid that catastrophe. And what you said, or what we saw Trump say, is I'm keeping an eye on the bond market, right? I saw what was happening there and I had to respond accordingly. It looks fine now is what he's telling us. But in reality, he's watching that because he knows that's the structure of the entire US economy. And he didn't say he's watching the stock market, right? If you heard his interview, he said, don't worry about the stock market. You can't look at that. We're going to have periods of ups and downs. But when it comes to the bond market, he's getting very serious, very fast on this. Lynette asked, gold is so high, wouldn't this be a good time to sell some of it if I need extra cash on hand? Well, Lynette, if you own gold already and you're seeing that it's in profit and you want to take some profit off the table and you need cash, yeah, absolutely. It's a good time to be selling it. But in reality, if we're seeing that gold is going higher and all the predictions are for gold to go significantly higher than where we're at, if you don't need that cash, I'd say now is a good time to be holding your precious metals. James says, when is the best time to buy? It's too high. Should we wait? Well, it's too high relative to what? And James, I'm going to get into this. And for all of you watching, we will go through a lot more of this as I get into the predictions and projections for where gold's going. But again, you won't see a single voice saying that gold is not going higher than where we're at right now. And you'll be waiting all your way up to $4,000 an ounce gold if you're hoping for gold to come down dramatically. I just don't see it happening. Okay. Let's get back into this. I'll come to some of these questions again later. The Treasury market is seeing this major shakeup again, where Treasury bond yields are seeing the largest weekly rise that we've seen since 1981. And here's the thing, to break that down, rising yields mean falling bond prices, which happens when bonds are being sold. So when there's dramatic selling of bonds, the bond prices fall, which means their yields have to go up so that they become more enticing for people to buy. And that Treasury bond yield is spiking, which means that bonds are being sold. Now, the 10-year yield note, which helps decide the mortgage rates, credit card debt, auto loans, that has spiked. And with that spiking, it really threatens the entire global economy. It creates hard times across the globe, not just here in the US. And so there's this broader perspective of that needing to stay under control. But again, can we maintain that as we go forward into this trade war? In addition to what we've seen with bonds, the dollar index, the DXY, it's down over 8% this year, which means we have a falling dollar, right? What we're going through right now with the crash in the dollar, it's worse than when Nixon took us off the gold standard in 1971. And his policies at that time were seen as really the catalyst for significant stagflation in the 1970s. And so that's what many economists are warning about, is stagflation and recession. Minneapolis Federal Reserve President Neil Kashkari said that the recent market trends show that investors are moving away from the US as the safest place to invest. Ray Dalio, who is the founder of the largest hedge fund in the world, one of the most respected men out there, says that if you think it's bad now, wait until we can't find anybody who wants to buy our debt. And that's what we're starting to see the beginning stages of. He says that the fallout from the turmoil in the bond markets may cause more severe shock to the monetary systems than the 2008 great financial crisis. And so I really want to impress on you just how important this is, what we're seeing with the dollar and with the bond market, because it means the appetite for investing in the US is going away, at least temporarily. But of course, if that becomes more permanent, that changes everything for us. And that's why people are moving into gold and silver, because it's not just dependent on the US markets. Okay. This leads us into the Trump tariffs and the trade wars that are happening. There's this headline that I want to read to you that really struck me. It says, the US and China are going to economic war and everyone will suffer. These are the world's two largest economies right now in a serious trade war, and they're raising the stakes on one another back and forth almost daily, right? The US and China account alone for 44%, of the world's economy. That's probably going to create some ripples in all markets as we go forward and get into the stalemate. So economists have been warning that imposing tariffs, of course, will raise prices for US consumers. It's going to harm the economy. We'll see inflation go back up. But the thing is, Trump is very determined here, right? He stressed the importance of fixing the country's trade deficit with China. And he says that unless we solve that problem, I'm not going to make a deal. So we're really, again, in this stalemate with China, going back and forth. Neither country wants to acquiesce to the other because it has huge implications for posturing in the world. Okay. Trump's goals right now are evening out trade, turning the US into a producing nation. Again, he wants to create factories and manufacturing. And in order to do that and become a player on that world stage where we're exporting, he needs a weaker dollar. He needs the Fed to be cutting rates so that the dollar can fall. And then he wants the Fed to be printing money to stimulate the economy from the ground up and really get that money flowing and create a stronger GDP. But the Fed has said they can't cut rates. And I'll talk about this as we go forward here. But again, that's Trump's goals, is to really even out the trading field. But his tariffs have been all over the place, right? Currently, what we have is a 10% baseline tariff, a 90-day pause on all of our reciprocal tariffs that have been threatened on all the countries across the globe. And then with China, this trade war that's happening where we've put 145% tariffs on them, and they've implemented their own 125% tariffs on us. So it's important that we kind of put that as a benchmark, because that could be different tomorrow. And the markets hate it. They hate that uncertainty, which is why we're seeing this volatility right now. Ray Dalio again says that the Trump tariffs have a very understandable goal, but they're being implemented in a disruptive way that could completely upend international trade. And again, we're seeing the beginning stages of that. So Trump has acknowledged that. He's acknowledged that he can push us into a recession with what he's doing. And he's basically all but told Americans to kind of brace for that. But he did say, I just don't want a depression. Well, keep in mind, in 1929, we're in the most overvalued stock market we've seen since 1929. And it was tariffs that pushed us into the Great Recession. And of course, the tariffs that we're seeing right now are creating that uncertainty, which is bringing the market down. So how far down does this go? Also, as we talk about recession and stagflation here, Trump is, again, pushing us towards that recession in order to get rates down. But the Fed is predicting a negative 1% GDP right now, which means that we're walking into recession territory. And Trump has said that he's changing the rules here, but he really won't tell anybody what those rules are. And the markets need that certainty. So as long as there's uncertainty on the table, we're going to be in some kind of mess and volatility here, walking towards that recession, right? Markets go down in recessions. They just do. They don't love that uncertainty or unpredictability. And you need to have a plan as we go into this new stage of the economy here. And I would say that the warning bells are ringing as loud as possible right now, which is obviously why you're joining us. But if you're hearing those bells, you have to come up with a plan. And that's what we're here to help you do, is talk to you about your options, diversifying, and making some moves out of what your current positions are if you're concerned about how they're performing. Remember that Goldman Sachs came out with a report right at the end of last year, and they said there's going to be a lost decade for the stock market. They're predicting anywhere between a 1 to 3% return on the market over the next 10 years, right? After the market drops dramatically here, just a 1 to 3% return per year. And so again, the economic landscape is shifting. How bad do things get when we get into that scenario? The CEO of JP Morgan Chase, Jamie Dimon, he again is one of the most respected men in Wall Street. He said that the tariffs that Trump is implementing will likely lead to a recession. BlackRock CEO Larry Fink said that the most CEOs that he's talked to would say that we're already in a recession right now and that things are going to get significantly worse. And then the former Fed president, Bill Dudley, said that stagflation might be the best case scenario for America that we can hope for amid Trump's tariffs, and that more likely the US will end up in a full-blown recession accompanied by higher inflation, and it's bound to be a no-win situation for the stock market. We are predicting 6.7% inflation expectations for the rest of the year. That's coming from Larry Fink again from BlackRock. And then George Savarelis, the global head of foreign exchange research at Deutsche Bank, said that we're witnessing a simultaneous collapse in equities, the price of all US assets, the dollar versus alternative reserve, which is foreign exchange, and the bond market. We're entering into uncharted territory in the global financial system. And even as markets tank and bond yields rise, the dollar is down to a 3-year low. In a more typical environment, markets would be hoarding dollars as safe haven from the other noise, and the dollar would be strengthening, not weakening. But now other countries are losing faith in the US, and they're actively selling down their US assets, possibly upending the dollar's global reserve status. That quote alone should tell you everything you need to know about what we're walking into. The world is pulling away from the US dollar, and we have had this privilege in the US of being the world reserve currency, of being the go-to place for people to put their money, not just here in the US with thriving markets, but across the globe, people put their money in the US, and that is shifting. This is coming from the heads of the major investment banks, and they're seeing the changes coming. So that's what we gear up for. Now, I don't know that every person has really realized just how big of an issue all of this is, right? It's like every disaster possible is potentially coming to a head right now. This massive problem that the US has created in 2008 by printing money and kicking the can down the road, all of that is finally culminating. And there's a very, very big if on whether or not we can avoid that. So what's the answer to a failing dollar? What's the answer to recession, to stock market crashes, to bond market crashes? Overwhelmingly, again, that answer is precious metals. And we see gold and silver performing the way they ought to in this scenario. David asks, what's a typical breakout you recommend for gold versus silver? Also, thank you for doing the webinar. Thank you, David. Appreciate all of you being here on this. David, if you hang tight, I'm going to get into gold versus silver, how we build out those portfolios for most clients, what they prefer. And again, if you want to talk about specific portfolios, you can jump right onto our phone line there and speak with a director who can kind of walk you through that for your situation. It's different for everybody. But typically, both gold and silver are going to be very important components of a diversified portfolio. I want to talk about the fact that this year, the U.S. is refinancing $9.2 trillion of government debt. Right? This is massive. This huge amount of money is coming back to be refinanced, and we can't do that with interest rates so high. We'll bankrupt our country. Right? Ray Dalio is warning against that. All these major economists are warning about that interest rate being so high and that debt being refinanced that we're going to create a serious debt crisis and dollar crisis. And so Trump needs the Fed to cut rates for this to happen. And the Fed has basically said, no, we're not going to do that. The markets are too high and there's too much money in the system. We'll see inflation run away from us. The Congressional Budget Office says that the U.S. is on course for a fiscal breakdown. Unless Congress changes course, there will be a reckoning and it will be grim. Right? That's coming from the U.S. Congressional Budget Office. Now, the Fed is expected to cut rates this year at some point, especially with the markets coming down, but we'll see, right? Gold does very well in low interest rate environments, and that's because gold doesn't have a yield like bonds. So when interest rates are down and those yields on bonds are not producing in a way that investors want them, they move their money to gold because gold is the other conservative investment, right? So in a low interest rate environment, gold does very well. If we see the Fed cutting rates, you can expect gold to go much higher. On the other side of that coin, tariffs are going to make it really hard for our rates to come down, right? Inflation might go back up. The Fed can't cut rates if inflation is going up. One of their biggest mandates is to tackle inflation and keep it in check. And so also keep in mind that if we're seeing treasuries selling off and the bond market dropping and yields are spiking, the Fed also can't cut rates because they need that demand for treasuries. And if they're cutting that yield, and there's no reason people want treasuries already, there's nothing there for them. And so it just makes it this impassable situation. So again, that situation, if the Fed doesn't cut rates, is very good for gold and silver. It remains a fantastic safe haven against a falling dollar and, of course, a very messy economy. So, remember, guys, that gold goes up against the dollar. As the dollar drops in value, gold is going to go up. So as the dollar continues to lose value here, as our government debt continues to climb, gold will only become more valuable. And that's really why we see it as being so crucial to own right now and protecting against the future of where the US dollar is going. It's anybody's guess, but it doesn't look good. And so again, I'm just going to throw this number at you. Call us right now if you want to jump off the webinar and just get into a discussion with one of our executives. That number is 866-607-2447. They can talk with you about this in more detail. And I'm not trying to get you guys to leave the webinar. I appreciate you being here, but I do want you to talk to somebody while these concerns are fresh so that you can actually discuss what's right for your situation. So with all this going on, gold is growing, right? We're seeing new all-time highs here. And before I get into the projections of where gold and silver are headed, this would probably be a good time for me just to press pause, and I'm going to answer some of the questions that have been put in the chat here that my moderator is sending me, and I appreciate you guys writing that, letting me know what's important to you here. Paul asks, when you liquidate, what is the process if you own and hold physical gold? So if you have the gold on hand, Paul, what we'll do is for our clients, we send FedEx to your home with packing material and a shipping label. You box that gold and silver up, whatever we've decided to buy back from you through a conversation and what you want to liquidate. They'll bring it over to us, and then we wire funds into your account. It's incredibly liquid and easy to own gold and silver. Our whole MO as a company is to make it as simple and as easy as possible for you to get out of the dollar into gold and silver, then of course back into the dollar at some point in time when you want to sell. Dr. Quincy says, is it better to have physical gold and silver in your possession or have it held by an IRA managed portfolio? Dr. Quincy and everybody listening, both, right? If you have cash off the side and you're concerned about where the dollar is headed, and again, it's not looking good, inflation going back up, the world losing confidence in the US dollar as the world reserve currency, central banks dumping US dollars and treasuries and buying gold. If you've got that cash and you don't have a better investment for it, put that into gold and silver, right? And have that gold on hand. It's going to give you a lot of confidence and you're going to sleep a lot easier at night. But what I would say is that the majority of our clients have most of their net worth tied up in 401ks or IRAs. That's just where we tend to put our money over the course of working. And so you've got this nest egg that's fully exposed to a failing dollar, to a crashing stock market, to a crashing bond market. And is there a conservative play inside of that portfolio right now? What we're hearing from the economists is no, there's not. There's really no safe haven to run to in traditional investments. And so put some of that portfolio into gold and silver with the retirement account, and that gold and silver will be held for you safely and securely. It's yours. It's physical gold and silver. You own it, and you can access it anytime you like, but it would be stored at a private depository. And at any point in time, if you want to take possession, you can pull that gold and silver out of the account. Okay. I think we're kind of coming up on a bit of a time limit, right? So I do want to get through the rest of the content, and I'll circle back around to these questions as we go forward. So I'm going to touch briefly on the geopolitical landscape right now. I'm not going to get into a lot of detail. You guys are seeing this in the news every single day, but we're alienating our allies. We have the Russia-Ukraine war that's escalating. It's not being solved like Trump said it would be. Putin's not coming to the table the way that he expected he would. Tensions are rising with Iran and the Houthis right now, shipping routes. And then, of course, China. All of that is escalating, and they've got their eyes on Taiwan still. There's all of these uncertainties. So you guys are reading about this every single day, but the point is that traditional markets don't love uncertainty. Gold and silver thrive in times of uncertainty. So as all of this continues to play out, just realize if there's uncertainty in the news, if there's geopolitical conflict, markets don't like that. Gold and silver love that. Which side do you want to be on? And that's where you just put general common sense at the table and say, this is coming down. This uncertainty is on the table. It's not getting resolved. Of course, markets don't love that. History has shown us that. And yet gold and silver thrive in the environment that we're walking into. And so if we think all of that is escalating, which position are we going to take? So, as I go through this, I want you guys to think through your own scenarios. What are you feeling? What are you seeing? Obviously, your gut is telling you something's wrong, as all of ours is. And when something's wrong, you flee to gold and silver. Gold is growing. Again, I've mentioned we've hit new all-time highs. Gold is sitting right about 32.40 today, which is incredible that we've seen that growth. But we're still very early, and I want to impress that upon you. We're just starting to see that growth take place. Since the year 2000, gold has actually outperformed the stock market about 1,050% on gold, 428% on silver. 244% on the S&P 500. So gold has done its job over the long term. And then on the short term, just since the start of this year, gold is up 37%, silver's up 14%, and the S&P 500 is only up 4%. So again, gold is not this traditional investment that we're all familiar with all the time and put our money into. It's usually in times of crisis that we start to pay attention to it. But in the background, gold has been doing its job all the way through the decades and will continue to do so as we go forward here, according to every economist and analyst that I'm reading. Right. So I don't see anything changing on that. Gold will continue to trudge forward and just do what it's been doing. More Americans than ever before are moving into gold and silver. We see that urgency coming on the table. And again, you're still early. People are just now waking up to this. It's not this mad rush to the exit yet. And so as you get in ahead of time, this is when you want to be getting into precious metals. Remember that central banks are buying record amounts of gold right now. They're doing that to prepare for a world where the US dollar is no longer the premier currency. UBS raised their upside projection on gold to $3,800 an ounce. And keep in mind, that's because we blew through their previous projection. Bank of America repositioned to $3,500 an ounce gold in the short term. And then Goldman Sachs and JP Morgan have their targets at $4,500 to $4,700 an ounce. Now, gold is going to $4,500 an ounce because the rest of the markets are broken. And we're in a banking crisis, we're in a bond market crisis, we're in a financial crisis, a dollar crisis, a government debt crisis. Our backs are really up against the wall here. That's why gold is growing. So imagine, if you would, with me, a world where gold is at $4,500 an ounce. What do the rest of the markets look like? What does the economy look like? How bad do things have to get? I also want to tell you that last year, ETF flows into gold were actually negative. There was net selling of the ETFs of paper, gold, and silver, but this year that's turning into a positive buying. And so more and more money is flowing into the gold and silver markets. That's something that you want to get ahead of. So now is seemingly a very great time to buy gold and silver. So I hope that answers your questions on that. I'm going to tell you a little bit about our processes. We touched on this, but there's two ways that we help our clients. One is through cash investing, the other is through retirement accounts. So any cash that you have off the side, whether it be in the bank or a brokerage account that you want to get out of, you do a wire transfer or a check over to American Hartford Gold. We'll generate a 7-digit client ID for you. We'll kind of talk you through that process. You do the wire transfer or the check to us. We get the funds in. We do a full consultation with you. We help you select the metals that you want, build out a portfolio, and then we ship that gold and silver to a private depository or right to your door. So if you don't want to have that gold and silver on hand, we can ship it to a depository and have it stored. But again, most clients do want to have that gold and silver on hand at their home, and we certainly can ship it right to you. We do have a buyback commitment to our clients. So if you ever want to get back into cash, we buy back fair market value with 0 fees on the back end anytime that you want to sell back. Again, we make it very easy for you. So if you have cash, you want to get that into gold or silver, call us today. We'll talk you through what that looks like. If you have a retirement account, and again, you're seeing the impact of these markets, you're thinking, I really don't want to ride this roller coaster down or ride out this volatility or this uncertainty. I just want to be in something that is predicted to go up and has stability right now. Gold and silver are a great option for you. And you can put physical gold and silver into a retirement account to protect those assets. And the way that that works is we open up what's called a self-directed IRA. So this is just a very quick application on our side. It's an account that allows you to hold on to physical, tangible assets rather than just stocks, bonds, equities, and the dollar. So we would have a conversation with you. We build out that application. We send it over to you for a signature via DocuSign. We get that back end. Our company is going to do everything they can to make this very simple. We'll do all the heavy lifting for you. So we'll call your current custodian. We'll help you liquidate the funds, get the transfer form submitted. And then we're going to keep our thumb on the process the entire time until the account funds for you. Usually takes a couple of business days, 5 to 10 days, depending on custodians. When those funds come over to the self-directed IRA, again, our directors will call you. We'll go through a full consultation. We'll get to know what's important to you, what your investment objectives are, your time horizons, and we'll build out a portfolio based on those things. And then we ship that gold and silver to a private depository. So again, a third-party vault that's outside of the banking system. You own that gold and silver. It's physically sitting in a room with your name on it, and you can access it whenever you want to. You can take RMDs, you can liquidate, you can pull cash out, you can pull the gold and silver out and have it sent to your home as a distribution. You actually own it. And it's only $225 a year for storage and custodial fees combined. That's it. It's very moderate. We do cover the account setup and the first year of storage for you so that everything is taken care of, and it's tax-free and penalty-free to move those funds. So I hope that kind of gives you a good breakdown. Again, if you want to get more specifics on that, I would certainly encourage you to call in that number right now and just get right on the line with one of our directors so they can talk to you about your situation. Okay, the last two things, I'm gonna kind of give a summary, but I do want to tell you why American Hartford Gold. You're here with us for a reason. We appreciate you being on the webinar. We appreciate your trust in us as you feel out who to invest with in the gold market. We're the largest precious metals dealer in the US. We've shipped over $3.5 billion worth of gold and silver around the country just in the last few years. Again, everything that we do is meant to make this simple and easy. All right, we have an A+ rating with Better Business Bureau, thousands of positive client reviews, and we do everything we can to make this a positive experience from start to finish. We are a full service firm. And what's really impressive is Inc. 5000 magazine, one of the most prestigious business publications in the world, has listed American Hartford Gold as the #1 gold dealer in the US, and they've given us accolades the last 5 years in a row. If you look, our CEO, our president are on Forbes, Newsmax, constantly talking about where the markets are going, writing about gold and silver. Our company is out there. We are the name brand in gold and silver. And when you're looking to make a change to your portfolios and get into precious metals, you really want to go with the name brand, the trusted company in the industry, and that's us. So you have our guarantee that we'll be here from start to finish to make this seamless, to make it easy, to do the heavy lifting for you, and really help you get confident and comfortable with the decision that you're making and get educated all the way through. We know that gold and silver are a new investment for a lot of our clients, and so education is key, but so is timing. So call us today. Let us help you out. That number is 866-607-2447, and we'll talk about what's right for your situation. We'll talk through your concerns, and we'll get you further education so that you really understand how this works. We've covered a lot here. I really hope this makes sense and kind of helps you get some certainty in the chaos that we're experiencing and why gold is the place that we want to be right now. Look, markets are dropping like crazy, right? It is a casino. I personally am concerned with that casino every single day that I'm looking at the news. I know that you are too. Many economists are warning of an unavoidable recession as we go forward. If Trump is anything, he's unpredictable. He's brazen. He's in a standoff with China. Our markets are being disrupted. Investors are leaving the stock market. They're leaving the bond market. They're leaving traditional US dollar-based investments. And that was once a cornerstone of conservative investing. And that's proving to be very unstable right now. Inflation is back on the rise, again, expected to be around 6 or 7% this year. The dollar continues to lose its value, its prestige, and government debt continues to climb. And Ray Dalio warns of a debt crisis, right? There's no certainty that Trump will fix everything. And even if he does, even if he gets his plans implemented, how long will that take before we get off the bumpy road that we're on? Factories don't get built overnight. People don't get trained overnight. This takes years, and we're upending everything right now. And then gold and silver are doing a fantastic job of protecting investors and hedging portfolios during these very unsettling times. And so if your gut is telling you to diversify and make a change, again, you're really spot on with your timing. You're getting out ahead of this thing as you start to see those warning signs. And I always tell my clients, look, if you're going to get in the lifeboat, let's get you the best seat in the boat, and let's certainly not have you swimming for it as it leaves the sinking ship. And so now seems to be the best time to be diversified before we get into the full-on panic mode of the market where everybody's headed for the exit, and before things get worse with the dollar, the markets, their uncertainty. You're in very good company here with so many others that are starting to wake up to this. And my job, our job, again, is to make this very simple and easy to get you into gold and silver and help you have kind of a friend in the industry that you can lean on for expertise and guidance as you go forward. A couple of quotes to leave you with, and then I will come back to questions if we have time here. Gold is clearly seen as the favored safe haven asset in a world upended by Trump's trade war. The US dollar has depreciated and US treasuries are selling off hard, and faith in the US as a reliable trading partner has diminished. That's coming from Nitish Shah, who's the commodity strategist at Wisdom Tree. Very, very prestigious company, paid to be right. That's what he's seeing. Analysts at TD Securities warn that currency depreciation will be the dominant force behind gold's surge in the coming year. Central bank buying fueled gold's 2024 rally, but in 2025, it will be all about the weakening dollar. Where's the dollar going to be at the end of this? After 15 straight months of buying treasuries, foreign investors, including central banks, have reversed course. They've been selling off long-term treasuries for 3 consecutive months now. The world is witnessing the acceleration of de-dollarization in real time, particularly among the BRICS Plus alliance. And then economist Lynn Alden says that Warren Buffett's Berkshire Hathaway, widely known as one of the best performing investments out there, is really just about even with simply owning gold since 1998, or about 27 years. So if you would have bought gold in 1998 and just held it, it would have actually performed better or right in equal with what Berkshire Hathaway has done over the last 27 years. That's mind-blowing. So if you're concerned about, what your investments are going to look like, gold is so steady and stable and typically so predictable. It's really a fantastic place to be in. So again, there's really never been a better time than right now from what we're seeing than now to own physical precious metals in your portfolio, right? Whether that's peace of mind, having gold and silver at hand on home, or putting into your retirement account and just being able to take a deep breath and know that you're outside of the markets that are so volatile right now. So, call us right now as we wrap up the webinar. Just give us a ring. These concerns are fresh on your mind. Let's just discuss how we can help you, what you're considering moving, and we'll kind of figure out a way to move forward with you. That number is 866-607-2447. And again, I will get into some questions here. I just want to thank you all for joining us today. I really appreciate you being here. We're going to consistently do this as we go forward. And if you do want to ask some more questions, again, you can do it in the chat. Our moderators will kind of hang around here for a minute, but also just call us so that we can discuss what is pertaining to your situation specifically and just make this really simple and straightforward. All right. Joe did ask, do the IRS track SD IRAs accounts for deposits because it's over 10,000? Look, when you're dealing with a retirement account, there's reporting to the IRS, right? They want to know if you've made a rollover or whatever it may be. The 10,000 has nothing to do with it. Where that number comes from is if you're pulling physical cash out of a bank account, the banks will report that cash withdrawal, or if you're depositing 10,000. Right, but if you're doing a wire transfer or a check, there's no reporting on the bank side, no matter the amount that you do. We have people that wire us millions of dollars, that write checks for millions of dollars. That doesn't get reported. And everything on our side is completely private as well. For the retirement accounts, if you do roll over funds, there's a record of what gets rolled over from your traditional IRA, your Roth IRA into the self-directed IRA. But there's no active reporting that gets sent out to the IRS, if that makes sense. So, just typical paperwork there. Jeremy did ask, back in 2008, 2010, in the last economic disaster, silver gained, if I'm not mistaken, 400%. Please don't quote me on this, but I think it's something like that. Yeah, look, silver will almost always outperform gold in these times. So we're going to get gold to move first, and then silver will rush to catch up. And again, that ratio between silver and gold is typically 16 or 20 to 1. We're at 100 to 1 right now, which means 100 ounces of silver are equal to 1 ounce of gold. So even if gold didn't move another dollar forward, silver has tremendous movement to rush and catch up. So if you're concerned about where gold's at, you think it's too high, I assure you it's not, but silver might be a better place for your peace of mind if that's the case, because it really has not gotten to move yet. I think that's it, guys. I'm going to have to jump off here. I really appreciate you being here. Give us a call today, 866-607-2447. We'll discuss how adding physical precious metals into your portfolio can give you the hedge that you need, and we'll get you taken care of.